Hello, everybody, and welcome to Let's Talk About Money, your daily show in order to know all the finance and economic news for your knowledge. I'm Fernando Tate, your host, and tonight we have a very special guest, Maria Garcia Granados Gonzalez, who's going. Oh, hi, Maria. Who is going to talk about how the stock market and bond market behaves. Well, first of all, my fans want to know why usually the stock market and the bond market react in opposite ways.
Thank you for inviting me.
Oh, yes.
For this question, I'm going to show you a graph. Stocks tend to rise when the economy is doing well. This will raise the profits of the companies, and this can cause inflation. The Fed increases the rate to slow down the inflation, therefore the bonds need to pay a higher yield. So existing bonds push down their prices to compete with the new ones. On the other hand, when there is risk and uncertainty in the market, people tend to play safe and transfer the money they invest in the stock market to the bond market. This will cause an increase of supply in the stocks and push the prices down, while the prices of the bonds go up.
Oh, wow, that's very interesting, Maria. But what is happening right now? Because my sources just informed me that the stock market and the bond market are both growing.
Your sources are right. Both are going up. In the bond market, the economy is not growing as fast as they thought, and there were little inflationary pressures. In the stock market, the investors are looking up for the negotiations between USA and China, and the Fed's position about it. Your host is very funny.
Yeah, I know. I heard WhatsApp Web in the back. We're going to talk about it later. Okay, we'll be right back with the show. Stay tuned.
コンソメコンソメコンソメパンチポンチじゃないよコンソメパンチうまさが効いてるコンソメパンチコンソメコンソメコンソメパンチコンソメコンソメコンソメパンチパンチで元気コンソメパンチ
Okay, so we have understood that the inflationary expectations are lower than expected this year. So how do you think that would affect the bond market and the yield rates?
Because the inflationary expectations were lower than expected, the Fed doesn't have the necessity to raise the rate.
Okay.
So the Fed is sending a message to the market that it will let the economy grow, and it has been well received by the investors. And also the bond market will continue to keep the rates low. So the prices will continue to go up. So it's a great news.
Oh, that sounds very good and interesting. Oh, okay. And what about the Fed? I heard that they are changing their monetary policy. What do you think about that and how it will affect the stock market?
The Fed's plan at the beginning was to increase the rate 3 times this year,
Yeah,
but they
that's
decided
fair.
to change because how the economy is performing.
Okay.
And they decided not to have any increase this year.
Any increases?
No, so companies are receiving this well, so they can have cheaper loans, and with this issue new bonds with lower yields, so this can cause an increase in their profits and also have a high valuation in their stocks.
Oh, that sounds very good for all the companies out there.
Of course.
So right now we're going to have a brief commercial for our sponsors. Oh, do I have something in my teeth?
Oh my god, stop, you're gross. We're still recording?
Oh my god, you didn't tell me that you were still recording.
Meow Mix comes in 2 varieties, original and seafood middles. A medley of mackerel, tuna, and crunchy centers bursting with seafood flavor. Meow Mix tastes so good, cats ask for it by name.
Thank you, Meow Mix, for this sponsor. All those cats out there are going to be very, very happy. Okay, finally, for your opinion, which of these 2 markets do you would recommend to look for?
I would recommend to look up for the bond market because eventually the stock market is gonna see that the economy is not growing as fast as they think, and also this will affect the growing of the stocks.
Oh yes.
So we should play safe and go to the bond market, and also because the rates are going to continue to stay low, and also the prices are going to continue to go up. So it's a great option for all the investors out there.
Okay.
Thank you for watching the show and for inviting me.
Yeah.
I'm really thankful for that.
Yeah. Thank you for watching this. Let's just talk about money. So have a good night and enjoy your life.
Thank you. Bye.
Bye.